Today, we're going to switch gears a little bit. Cory usually plays the role of MC, but I'm going to put Cory in the spotlight today and ask him some questions. We're going to continue our series on homebuyer tips and what's going on in the market and what we experience. And Cory, thanks again for joining me today. I wanted to ask you, throughout your real estate career over the years, what would you say are some of the biggest obstacles that you and your buyers face challenge-wise as far as buying a home? What are some of the biggest topics or reasons you find coming up in delaying a buyer finding what it is they're looking for, or challenges that they face throughout the process?
Excellent question. That varies between buyers, depending on what they got going on and what's their actual goals and how they plan to financially achieve those goals. Affordability is always a topic of discussion, generally speaking. How much one can afford, what's the best decision, given all of the data of a specific community or a type of house. After getting a real breakdown of what it is that my clients are looking for, and then seeing what that is like in the market, is all things that factor into decision making. Big things financially, of course, are going to be how much is insurance going to be for me? How much money am I going to have to front load in order to get into this house? Do I need to have it all at once? What do I need to have? Is there anything that I owe prior to closing on the house? Can I get assistance with down payment assistance? These are the things that I frequently asked. And believe it or not, people that are financially sound or people that aren't both ask some of the same questions, especially if this is their first time purchasing a home. So I hope that answers your question. Those are some of the things that you have to deal with when talking to buyers about buying a home, what that looks like.
It's always interesting when we have these talks because I think most would agree, realtor versus mortgage broker or mortgage lender. As a realtor, you are the face of the transaction. You're with those buyers and sellers all the time. A lot of times I'm not meeting them personally until I get to the closing table when we're pretty much done. So although I'll be a voice over the phone, or sometimes we'll hop on a Teams or Zoom call, even those mortgage questions a lot of times will be directed to you because you're the face of the transaction. But it sounds like a lot of what you mentioned is what I hear and see a lot as well. Only throughout my career dealing with home buyers, but personally in our buying a few homes over the years, something that I have found, and maybe you can give me your thoughts on this, 9 out of 10 times I would say that most people will have an area or a particular neighborhood even picked out. I want to be here, right? And every home that I've ever purchased, although I did have areas that I preferred, I found that going a bit outside those areas really made a huge difference in affordability. For example, in Houston, we have our Galleria, River Oaks, these hot spots where you're going to pay a premium for being in those areas. And I try not to really get too involved in that because that's your lane as a realtor. But I always ask people, I say, what is it about this area that has you focused so much there? Is it proximity or is it commute? Because those two things aren't always the same, especially here in Houston, right? Using the Galleria as a perfect example, depending on the day of the week or the time of the day, it seems like more and more every day now, but it may take you quite some time to just go a few miles in the Galleria area in a car. Right?
Yeah.
So if it's boiling down to commute, which I would argue is most people's concern, proximity might not always equal a faster commute. What are your thoughts on that? And how often does that come up in conversations about affordability?
Man, that's a very good question. It's part of that initial conversation that I have with somebody because it's definitely good to get them to say what it is that they are desiring, right? And then trying to find out what's the motivation behind it. What's the motivation for moving in this particular area? Something you want to be close by, or you frequent there often, or like you said, commute or proximity. Those questions are legitimate and have to be answered. But it always, 99% times comes down to budget. Now, in this day and age, with all the technology and all of the different avenues that a home buyer has at their disposal prior to even getting to an agent, they have done some research prior to, right? So they're familiar with areas, they know what they like. 9 times out of 10 in this day and age, if they're calling you and they're local, And majority of them have an idea and a sense of where they want to stay. And they even have maybe a few list of homes of some addresses that they've been looking in on that they want to start their journey. But it still is something that you must ask and dive into as far as proximity and commute that you want to, hey, let's talk about it. Why is staying this close to, as you mentioned, the Galleria so important? What do you do there often? Is that subject to change in the next 2 to 5 years? All those different questions just to get them to say things out loud and to make them think about some things. Because really and truthfully, as you mentioned, traffic in Houston is bad. And sometimes that's isolated to a specific area in Houston. So you may be having the same situation if you live 5 minutes away from the Galleria as opposed to you living 20 minutes away, because the commute, even in that 15-minute difference, is fast, right? But it doesn't matter when you get to this specific spot at a specific time, it's just going to be jam-packed. And it is what it is, especially in that area with 610 and all that's going on. It's just difficult. So if you can find some affordability, something more cost-effective for the long haul for you buying a home, and you may have a 15-minute extra drive, but it's not necessarily in traffic, is that of value to you? Does that open up the book of locations that we can look into? Because you don't want to be pigeonholed. And sometimes when you get pigeonholed into, I want to be in this area, then you can get upset or frustrated because now you're limiting yourself to however many homes are on the market at the time. You're maximizing how many people that you may be communicating with the same thought process of living in that same area. All those things come into play. So honing in on what is important about why you're choosing the specific area because of your commute or proximity to something. You really want to get the home buyer or buyers to really verbalize what it is that they are really, their expectation is there.
No, I agree 100%. And the reason I wanted to talk about it is because when we bought our first home way back in 2004, I had already been doing mortgages for a little over a year, and I'd worked with many realtors. So I would imagine that I was more educated than most people, right? Than the average person as far as real estate was concerned. But I also was so fixated on being in a certain area, right? So I think back then we were Richmond, Westheimer area, southwest-ish side of town. And at the time, it was minutes away, probably 10, 15 minutes away from Memorial City Mall and a few other places that we would frequent. But home prices were just so far out of our budget. So it got frustrating until we realized this was way back in 2004. So Cypress was just starting to grow or be developed, really. So we had found our way out there. And I remember my wife and I looking at each other and saying, wow, this is so far. It really wasn't. I think because it was so much empty space at the time, and that drive seemed so far because of the empty spaces, right? We quickly came to realize that this made me start to really think about proximity versus commute, because at the time when we did eventually buy in Cypress, the closest mall to us, and it's kind of funny how I'm talking about malls, I can't remember the last time I was at a mall, but the closest mall, shopping mall to us at the time, I believe was, what is it? Not Memorial City, but in Cypress, it's
249?
Yes, what's that one called?
Man, I can't even think of the name of it. I just know it's a mall right there.
I don't even know if it still exists, but anyway, that mall was the closest in proximity. Now you're gonna make me find the damn mall.
Look at it. It'll bother you.
Yes.
It's gonna bother you. So if it's the one off, it's gonna, as soon as you say it, before you finish it, I want to know exactly which one it is.
Willowbrook. So Willowbrook Mall
249
on a map.
1960.
The Willowbrook Mall on a map, proximity-wise, was closest. However, to actually drive there, I could get to Memorial City Mall faster, which was almost twice as far distance-wise. I could get there faster than I could get to Willowbrook Mall. So I think that is a perfect example of what we're talking about here as far as proximity versus commute. Now, luckily, we were both able to work remotely, and we, for the majority of our careers, have been able to do so, which is great. And that obviously opens up many different opportunities for buyers if you're able to work from home or remotely. You're not as pinned down, right? And that's becoming more and more common. But I came to realize when I realized that, how many other things was I reasoning for this particular location and closing my mind and opportunity on all these different other homes outside of that area that were significantly less expensive. Actually, not only were they less expensive, but came with much, right? Much more living space, much more amenities, etc. And if I didn't have that revelation, I probably would have paid twice as much for half the house, probably twice the property taxes, etc., which is the next point I wanted to talk about. I wanted to talk about some things that could help people with that affordability, because let's be honest, some other things that we address all the time as far as roadblocks or temporary roadblocks for a lot of buyers is I want to have a certain amount for my down payment saved up. I want to make sure my credit is perfecto, and everybody wants everything to be perfect, which is admirable. And obviously we want to do our best to put our best foot forward. Nothing's ever going to be perfect. And I have found that a lot of people will sometimes wait to have a certain amount saved for their down payment or have their credit score to a certain point when they had already previously been able to qualify for something. And the time it took to get them there caused home prices to increase. So
right.
The benefit that they got from an increased credit score may have been absorbed from a market shift, whether it be interest rates rising or home prices rising, to eat up the little bit of benefit that they would have had their scores originally been there, right? So I always say I'm a huge advocate for, if you can do it now, if you can afford it now, over time, I think most would agree that real estate is going to increase in value and cost. So it would behoove most people to take advantage of today rather than putting it off if you don't have to.
Right. I would, and this is what we do. This is how we get paid. Of course, ideally you would want somebody to purchase right then and there. But just doing the proper due diligence and working with somebody and truly being an asset to them in terms of making a decision. Sometimes it's down the line, sometimes it's right now, but exploring the options that you have before you, especially if you are approved and if you can't close. If you're approved, you can close on a home, and you can close on a home that pretty much meets all of your needs and most of your desires. Then yeah, I think waiting for perfection to happen is just it's smoke and mirrors. I think you should always go for, hey, this is the deal. This is an opportunity that we found because it meets where you want to be. You can afford the monthly payment. We get you some incentives. And yes, you may hear some things in the news that there's a possible downspin of interest rates in the near future. You don't know about that, but what you do know that it's a fact right now is that you can purchase right now in something that we have really went back and forth and wrestled with, and we found out what it is that you want, and this is it, and these are your options. So why wouldn't you want to take advantage of that? Cool. If something is slightly cheaper down the road, may be the case, but it may not be the case. It may be smaller interest rates or less expensive interest rates. But then, of course, here in Houston, what typically happens there is you're going to have higher home prices.
Right.
Because of supply and demand. Now, with that being said, it can be every market has multiple markets within inside of it. That's what people have to know. When people are making statements about a general marketplace, take Houston, for example, they're talking about all of things inclusive. But when you're dealing with an agent and you're talking about specifics, then you're talking about markets within a market. So you may be talking about Cypress, or you may be talking about Katy, or you may be talking about Pearland, or you may be talking about Pasadena. Within that market, there is difference than what the general media knows about the entirety of Houston. And so that's where you have to take that into consideration as far as affordability, because pretty much on every side of Houston, there is homes in various price ranges, because there's new construction everywhere. There's just more affluent neighborhoods. There's mature neighborhoods on all sides. So if you're looking for a specific price range, 9 times out of 10 on the west side, the east side, south side, or the north side of Houston, you're going to find it. It's just a matter of where do I do me as a family? I'm not at work, or when we're just hanging out, what are the places? Then those side of where specifically, unless you just are just stuck on, I gotta stay in this zip code because of that and the third, then I'll do my best to help you find it. But I never want to limit ourselves to what the possibility of it is.
And I know, again, for me, purchasing our first home, I think it's because it's such a large investment, right? And it's very personal because it's such a large investment. And that's where you got to, a lot of time people are purchasing, especially when you're purchasing your first home, there's plans to raise a family or whatever you got going on. So it's a big deal, not only financially, but it can be very emotional. And because of the emotion involved, I know myself, even being in the business, I got really hung up on some things that at the end of the day probably didn't matter all that much and ended up costing me a lot of money because I didn't really think about it, right? So for example, our first home, we had to have a game room. We had to have a media room. We had to have a certain amount of square footage. We had to have the cathedral ceilings. All of those things that I just named, we didn't have to have at all. So we got a pool table, we put it in the game room. Cory, in 17 years, ask me how many times I used that pool table.
Please tell me more than
maybe 3 or 4 times.
Oh.
Matter of fact, we had a going away party because we were very close and still are close with our neighbors over there. And we had a cast hoorah at the house and we had it upstairs in the game room. We played pool. We're like, wow, this is fun. We should have done this more often. But hindsight, we used the media. Kids growing up, the kids did use the media room quite a bit, but I was the one who had to have it. And I probably used it. I can count on one hand the amount of times in 17 years I sat in that media room and watched movies. So I think a lot of people have that in common where they have this idea in their mind of what a dream home is. And they have to have all the boxes checked. And again, that's great. If you can do that, wonderful. But at the end of the day, I can tell you personally that you don't need a lot of those things. And I always tell people that if you're able to check 65 to even 70% of what it is you're looking for, especially if you're currently renting, right? So if you're living rent free, obviously that's different because you have more of an ability to wait and see things out because you don't have the big expense right now. But if you're renting, guess what? With home price increases, the rent's going to increase as well. So that could be money going towards your building equity. But it's important to really analyze what it is you're looking for and why those things are on your list. And this is something that comes up a lot when people say, well, it's not checking all the boxes. It's not everything I want. Again, I understand it, but I can't help but think when I hear that, so you're paying $2,500, $3,000 a month in rent. Is that your dream home? Is that checking all the boxes? Yes, sift the tea. Because seriously, that goes back to the emotion in the decision. And there's that old cliche that when emotions get involved in important decisions, things get skewed and bad decisions can be made. And not to say that regardless of what we do, we can put the dollars and cents and the analytics and study everything. At the end of the day, purchasing a home that you're going to live in is going to be an emotional decision, but we want to try to minimize that as best as we can and think logically and say, oh, here's my current situation. Is this better than what I'm paying rent for right now? Is it a bigger space? Is it giving me 60, 70% of what I'm looking for? Because let's be honest, even if you find 100% of what it is that is on your list, if you're setting your goals right, 3 months from now, you're going to have a whole new list, right? 12 months from now, you're going to have a list of things that you hate about your dream home because things should always be getting better. You should always be setting the bar higher. So if you can get into something and start building and establishing that equity and it's got 65, 70% of what you're looking for, I look at that as a big win. I think with affordability, as you mentioned earlier, it's always been at top of mind for most buyers, but now more than ever, everything's getting expensive, right? We were just talking before we got on to this Teams call. We were talking about homeowners insurance and how that's shooting through the roof. Government's still shut down, and one of the big thing that they're arguing about or not arguing about is health insurance. That some people's health insurance rates are going to double, if not triple. Some people couldn't afford health insurance before this. And now with whatever's going to happen with premiums, a whole lot more people aren't going to be able to afford it. So everything's getting more expensive. And to have a roof over your head and establish and build that equity, for me, is a huge peace of mind. And I would hope that most people could see that and take advantage of it.
I say, hey, it's your coin. At the end of the day, you make the decision. especially when you're working with me as a realtor, we're hired help. Think of us as, however we used beforehand, as a consultant in an area where there should be more of an expertise on our behalf. And we're just trying to navigate through some of the things that you may be questioning and match the two so that you're aware of what you're already thinking about. But for sure, buy the house that makes you happy. Buy the house that you feel is for you and your family and for your future endeavors. I wish you the best. I just want to help you by at least soliciting some information to you that should be part of your thought process before you sign on the dotted line, and if you're giving up hard-earned cash before you do that. Because once you do, it's not like it's gone forever, but it's a longer process to get it out. Cash is in the bricks at that point. The home prices typically over a period of time, you want them to increase, right? You want the value of your home to increase because in the future, it is an investment. And in the future, after you've invested into it and you may have something as a life-changing event where there is an expansion that you want to do, or you got to move, or whatever the case may be, you want to make sure that you're getting more out of it than what you put into it at that time. At least have the opportunity to. But there are lows where that necessarily isn't 100% the case and prices come down. As we look at it now, currently, before we got on this call, me and Eddie were just looking at the market as it is today. And if you look at home prices and home values, and this is specifically to the single family market, home values of what they're selling for as of 25 September, they're down in terms of overall price. That's the aggregate amount of homes, which is all of the homes sold in that month, but it's compared to the year before that same month. And case in point, right now in September 2025, it was $327,000 was the average home price. This time last year, it was $333,900. Is it a time to buy? In my opinion, hey, it is a decline year over year there. And there's interest rates that have been lowered. And it is fourth quarter of anybody's year, whether it's physical or just in general, especially in the housing market. Fourth quarter means builders or anybody wants to get out of something so they don't have to pay taxes on it. And so they're willing to part ways with deals. And in this current climate, they're willing to part ways and give up a lot. And there's inventory. Everywhere you look, there is higher rates of inventory, meaning there's more homes on the ground that are on the market to sell than there are buyers.
Right.
And in that situation, you as a buyer has the upper hand. And who would want to take advantage when most of what you want is going to get a yes to it?
Right.
I want these. Oh, great. Because if you know what's going on, if you hear what's going on in the news, a lot of homes are going off the market and they're being under contract, but then they're coming back to the market.
Right.
Because buyers have an option to say, I got something else, or I'm having cold feet, or whatever the case may be. So you're running into that situation where homes that you may have lost out on may come back to the market. Statistically speaking, that's what's going on right now. And it's a wild time, especially for sellers. I feel for some of my sellers out there because it is the Wild West when it comes to that. You try to grab it to a buyer and move forward. But the reality of it is you're competing as a seller with a whole bunch of different homes on the market. And everybody is not in the same pool of play when it comes to how much equity they have to play around with when these buyers come with asking for so much. And it's just the nature of the game. It's just the cycle that we're in. But specifically to the buyers and affordability, it is a perfect time to buy. It's a perfect time to explore. It's a perfect time for you to sit out there and say, hey, well, let's look at these homes over here. I'm starting to notice that home prices have slightly trickled down. And I see more out there than what I started looking at a month ago. Those are some things that you want to consider. Those are some things that you want to think about because we're in a market where buyers can take full advantage of whatever they want, for the most part. Whatever they want, they can get it. So who wants to buy anything, right? For that matter, who would not want to take advantage of that, or at least open the door if you've been thinking about buying a home? I've been renting. This is a prime time to, hey, my lease is coming up in a couple of months, or my lease is about to be up on a month. Why not get out there and find something that may be equal, maybe even less than what you're paying for your rental property?
No, and you touched on something that I think is so important. You used a lot of verbs there, right? Because I don't know about you, but a lot of people have a tendency to say, I'm going to wait until this. I'm going to wait until that. And if you're serious about anything, there's very few things that I could look back on in my life and say, well, just waiting got me what I was looking for, right? You have to have some sort of action plan. What am I going to do during this time? And you talking about market, I would argue that every market throughout history has similar opportunities if you're actively looking for them, right? Yep. And now more than ever, because obviously in a buyer's market, there's going to be more of those opportunities. But I think it's unfortunate that a lot of people let their plans be dictated by the news or social networks, and they hear these things and just run with what they're hearing instead of diving in and doing their due diligence and doing their research and talking with a Cory or myself about opportunities and keeping their ear to the street, so to speak, or their thumb on the pulse of what's happening and understanding what can and cannot be done in these markets. What would my payment look like, right? So, for example, you might hear, well, home prices are dropping, and some people, oddly enough, you just mentioned that that's a great thing for buyers, right? If I'm buying a home, I should like the fact that home prices have dropped. But some people will look at that and say, well, I don't want to buy a house if home prices are dropping. Because they're thinking in their mind, well, I'm going to buy it now and prices are going to continue to drop and I'm going to lose. Guess what that reminds me of? When interest rates were 2.5%, guess how many people were saying, I'm going to wait until they drop to 1. How's that working out for you? So this, if you look, we've got in real estate, we've got what we call the 5-year rule. And it's very rarely throughout history. I look this up regularly, and feel free, you guys out there watching, to Google any 5-year period. There's literal blips in time where it'll go against the 5-year rule, and they're very brief. And basically that 5-year rule states that if you buy a piece of real estate, generally speaking, over 5 years, you're going to see a profit, and in many cases, a significant profit. Cory, you just mentioned earlier, average home price in Houston is about how much did you say? $327,000. Take a wild guess. I just Googled average or median home price in Houston in 20 was $275,000. So Cory just mentioned that
that's a 50 plus thousand increase.
Right. And that's even considering you said it dropped about 10,000. How much? 5,000 from last year?
It's about 7,000 from last year.
So it's down 7,000. So if we add in that 7,000, that's a huge, in just 5 years, that's a huge profit.
60 grand.
So those are things to consider, that don't be that guy or gal that's out there saying, well, I'm going to wait until they're going to drop lower, because time in the market very rarely works out for people. A lot of people don't have the time or energy to do all the research necessary, and doing that research isn't going to guarantee a win anyway. No. But what is typically almost guaranteed, or as close as you can get to being guaranteed, is that over time, the value in real estate is generally going to go up. There's going to be your plateaus and in some cases a minor decrease, but that 5-year rule has winning stats on its side. And 100%. The huge difference between real estate and just about any other investment I can think of is it's a roof over your head, right? We can argue about the price of orange juice or microchips, and might argue technology is a necessity at this point, which for most people it is, but nothing is more necessary than maybe air and food, but a shelter is right behind that, right? So unlike any other investment, it's a necessity to survive. And that's why over time, that is always going up. And it's important that if you are on the sidelines, if you're waiting, make sure that you understand what's going on, because simply waiting isn't going to net you great results. Have a plan. And if you need some help putting that plan together, that's what we're here for.
Yep. We're here to help. This is what we do. And we want to go to somebody who is a field of expertise, that knows keeping a beat on what's going on, and they can answer the questions that you may have. Sometimes you can't find that answer to somebody that you just leave their real estate license or got their mortgage license. They may not have dealt with situations or have a keen sense of what's going on to be able to speak accurately to something. Not to say that they won't, but you want to be represented well on both sides of it, especially this amount of coin that you're going to be potentially dropping or just getting yourself into for the next 15 to 30 years. You want to make sure that you are dialed into the facts and that you're dialed into what it is that makes the most sense to you and your family, because it is a decision. It is an emotional decision, but it's a fun one and it's a great process. Once you have all those things aligned and you're working with somebody who's going to make sure that you don't miss a step and keep you well informed long before things actually speed up and begin to happen in the transactions. Eddie, this is a good one about just affordability things, talking about just anything that deals with purchasing a home and buyer sentiment and why people are being in certain situations or certain proximities or whatever the case may be. It's always a huge part of, especially the preliminary portion of getting out and just starting to work with a buyer.
Before we go, Cory, I want to leave folks with a few things that we feel might be able to help with that affordability and some things that not everybody's necessarily aware of that can be utilized. We talked a little bit offline before we hopped on here, and a little bit while we have been doing this, about the rise of insurance premiums. Mm-hmm. And everybody has their different thoughts on this, but I've owned a few homes over the last 20 some odd years. And I don't know, I guess I'll ask you, I know you've owned a couple of houses over the last few years as well. Have you ever had to call in an insurance claim? And if so, how many?
Not an insurance claim. No, not a homeowner's insurance claim. I have not had to do that. We bought our first house right after COVID. I'm sorry, not after COVID, but after Hurricane Harvey, not too long afterwards. And we sold it right before COVID. And then, of course, you got some rental properties that we haven't had anything to phone the insurance company about. So it just hasn't happened. And most of those situations are huge deals that come about. Otherwise, you have like supplemental insurance or American Home Shield, where you have home warranties, things like that cover those certain things. But to put in a claim for my home, I haven't had to do that. But I have close family members that have had to do it for whatever reason. And so it's something to have, but it's required.
That's why I bring it up, because I often will mention this to my clients. Again, most people are looking to save in as many areas or aspects as possible. So I always mention, because I'm an advocate for it personally, and obviously you want to look at your situation and understand your options. But more times than not, maxing out, as Cory mentioned, if you're getting a mortgage, homeowner's insurance is required. So this is not an argument against insurance. It's a necessity. You have to have it, especially if you're getting a mortgage. But I also, over the 20 some odd years that I've owned various homes, I've actually only called in one insurance claim, and it was to replace a roof. It wasn't a situation where we were in leaks or rain through the roof. It was just that time to replace the roof, and luckily it was covered. So we had that done. But we are in Houston and storms are getting worse, so you want to have adequate coverage. But if you're able to max out your deductible to a 5% as opposed to the typical 1 or 2% deductible, that can, in many cases, make a huge difference in your premiums. So you'll pay a lot less in your premium, which is guaranteed. You're always going to have that premium to pay. Your deductible, yeah, might be higher, but what are the chances that you're going to have to pay that deductible, right? So I balance that risk and I calculate it and say, oh, this is going to save me in the long run. And if I do have to call in a claim, yes, I'm going to have a higher deductible, but I understand the difference in saving in that premium. So that's definitely something that people might want to look into to help out with that affordability. Something else is, obviously, we've talked on other videos about minimizing your down payment. Some people are very motivated to put more money down because they say, oh, that's going to lower my payment, which is obviously going to help make things affordable. But what it's also going to do is get rid of some liquid assets that you may need for a rainy day. So if you don't see a significant pricing benefit to putting more money down, sometimes putting down a lesser down payment can help out with your affordability as well. Cory, before we go, is there anything else you can think of that might help your Susie Q or Joe homebuyer out there with their affordability?
No, I just continue to say, even when you're in the process of actually searching for a home, you've gotten approved, just continue to keep all of your credit lines in order and paid up on time. But don't be afraid that typically what I have found in my business, in my practice, those first 1 or 2 homes, right, they set the bar. So don't miss out on the good thing if you cross off all the T's and dots all the I's. That's what I would say. It's going to be some homes that we walk away from. You're like, man, that was everything. I was like, great. Our question is, why wouldn't you purchase that home? Not what else do you need? Why wouldn't you purchase that home?
Right.
And then you answer that question. And then you may see 1 or 2 homes after that, and that's fine. But if you find something that you love, you fall in love with, for whatever reason, that's going to be the thing that sets the bar for every home. And you're going to do it happens naturally every single time. Every other home that you see is going to be like, man, that other home had this. Or that home that I liked had this, and this doesn't have it. I don't know about this. Just keep in mind and don't be like, I got to see 15, 20 homes just to get a feel. If you see something that you like and it matches everything that we discussed, go for it.
Right.
Don't be afraid.
No, that's important because I think we've had a few we've talked about over the years that haunt me that I missed out on. And it's always great talking to you. I appreciate you taking the time. And for those of you out there, if you've got any thoughts or you want to chime in, please comment below with any questions or feedback and let us know what you'd like to hear about on the next video. Cory, how can we get in touch with you?
My information will be down below, but Cory, the real estate guy, on all my social media, my cell phone and all that is available down below. This is what I do. I work for eXp Realty. That is the brokerage that I work up under where my license is held. And I do, yes, of course, the majority of my business are referred to Eddie because he has been phenomenal ever since we sat down and we talked. I think it was Buffalo Wild Wings the first time.
I think so. I was stalking your videos. Cory got me motivated to do more videos and content. So I'm trying to.
Yeah, man, you want to work with somebody that is integrity driven, somebody that is accessible, not crazily accessible. They have a life, but they're accessible beyond just the normal business hours. They stretch things. They can become flexible so that you can get what you need. And Eddie has been that for me. So I refer a lot of business to him. He hasn't been able to handle all the deals. It's just a part of it. But if you call me, I'm going to say, if you haven't been approved, let's call Eddie. If you have been approved, let's call Eddie because he's great and he's going to be a load of information for you, which is a benefit. But that's everything, bro.
I appreciate you, sir. And if you guys have any questions, you want to get some numbers, a loan comparison, or just questions in general, you can call or text me at 281-304-6353, and we will catch y'all on the next video.
Peace.
Stop this. My memory is going. Okay, there we go.
Man,